Hey folks, Jeremy Whaley here from Trade Maestro, and I want to talk about the market and what's going on. Last week there was a lot of selling happening, and people were freaking out because all over social media and all over the news, you saw images that looked like this, and you saw the market selling off, and it looked so scary. And yes, it's true. We opened up Monday morning, or down 1,000 points on the Dow Jones Industrial Average, and whew, that's like really scary for a lot of people. So what does it mean? Are we ready to return to business as usual? Should you be freaking out? Should you sell everything you own and run for the hills? We're going to find out in this video. Let's go. Hey everybody, it's Jeremy Whaley here from Trade Maestro. Hope you're doing fantastic today. And like I said in the opening, a lot of chaos happened last week, a lot of misinformation and some truths mixed in. There's always a little bit of truth, but I want to dispel that and kind of break it all down for you and kind of give you some peace of mind or maybe some words of warning about where things are going and what you should consider doing with some of your trades if that's what you're looking at. So be sure, if you haven't subscribed already, be sure to get subscribed to the channel so you can get all these updates and more as I release more content. And we do these little updates. Like, for example, last week, did you know I did a live stream where I talked about all this on Monday? And a lot of you missed it because you weren't subscribed. So get yourself subscribed so you get the little alerts, and then you won't miss any of those. All right. But where are we at now? It's been a week. And as I said, if you were looking at the media last week, this is what you were seeing. And I want you to start off by recognizing that this is not even real. I mean, it is, but this is a 10-minute chart. Okay, so what they like to do when they want to stir a lot of fear is they zoom in and they show you a worst case scenario and really try to extenuate it. And so that's the first thing that happened last week. Second thing that happened last week is Japan overnight, Sunday night in the United States, Monday morning in Japan, had a lot of selling. Again, they built it up to be worse than it was. They said it was worse than Black Monday. It wasn't worse than Black Monday. Black Monday was down 22.5%. And last Monday in Japan, the market was down like 11 or 12%. So it was about half of it. I'm not saying it wasn't a big deal. I mean, it was a big deal. It just wasn't as bad as the media made it out to be. Okay, so you gotta consider the source. All right, so what happened in America? What happened in America is overnight, people were watching that, they kind of freaked out, and the markets opened down. But let me take you back to the chart and show you what really happened. This is where the markets opened, and that was pretty much it. That was the worst of it. I said this Monday night, what people didn't realize is the rest of the day, the market went up. Okay, you didn't hear that in the media. You didn't hear in the media people telling you that, hey, we actually went up about 500 points today. We just started really low, but we actually went up 500 points. And they didn't tell you that because they're going day by day and they're making it a worst case scenario. And then what happened the rest of the week is, in fact, to show you this, I'm going to go to a daily chart, which is way easier to read. In fact, you should never really look at an intraday chart unless you're day trading or unless you're doing something where you really have to see an intraday chart, like a 10-minute or a 5-minute chart. You really shouldn't do that. You should look at this daily chart. This is what you should look at. And here's what really happened last week. That is actually last week's trading. And you can see that all week we pretty much traded to the upside. Now we had some red candles in there. And I get it. Thursday and Friday of the week before had been pretty bearish. And so there was a big move. But when you listen to the media, they were making this big deal about how the market lost $1.4 trillion. And they didn't tell you the rest of the story. What's the rest of the story? Well, zoom out a little bit. You always got to zoom out and get context. And what they didn't tell you is since November of last year through current, market was around 32,000 and it rallied up to almost 42,000. It's a little bit shy of that, about 41,500. Okay, so almost 10,000 points over the last year. Did they tell you that? No, they didn't. So they're screaming about the market going down 1,000 points, but they didn't talk about the 10,000 points that had gone up. Markets are always going to have ebb and flow. And this is what I want you to understand. I want you to have peace of mind. There's no reason for you to be afraid. So I'm going to teach you what really happens. Anytime that you see anything extreme in the media, if you hear them saying that it's going to go straight to the moon, you hear this about like cryptocurrency, XRP, Bitcoin sometimes. And I'm a fan of those things, but they don't go straight up. Okay. Or if you hear them saying that the market's crashing, it's not true. Very, very rarely. Even in a black swan event, like you take like COVID of 2020, and even then, the bottom didn't just fall out. We don't go to zero. Like that doesn't happen like that. I've been trading since 1999, so 25 years, and I've never seen it happen. I've been through 9/11. I've traded through the market crash 2008. I've traded through flash crashes. I've traded through the 2012 market, 2022 bear market. I've traded through all sorts of bear markets. It doesn't happen the way that they make you think it happens. Okay, so I'm going to show you what really happens. Here's what really happens. What really happens is markets trend. They put in some sort of a topping pattern, and then they trend down. That's what really happens. Okay, it just like after summer comes fall, just like after fall comes winter, after winter comes spring, and after spring comes summer, markets cycle. Okay, so that's the first thing you got to know. Markets cycle. The second thing you need to know is they cycle in patterns, okay? So what you don't see is you don't see a market go straight down. Instead, you see it go down, rally, go down, rally, go down, rally. And eventually it puts in a bottom, and then it reverses and it goes the other direction. That's what happens. Okay, so now you know this is what happens. Now the question is, what's happening right now? And what I want you to understand, when you look at this blue line that I drew, I'm going to circle in here 2 little bounces, okay? Those little bounces are what we call a bounce. That's one term for it. Another term for it, some people call it a retracement, where it's actually going back against part of the negative, in this case, a bearish or negative progress that it made, and it's retracing back up. But when this happens, when you see these little retracements, when you see these little bounces, inside that, little patterns occur, and we call those continuation patterns. And there's only a few of them that you need to know, and I want to show them to you right now, okay? So the first one that you're going to see is one that market sells off a little bit, and then it will go like this in kind of an upward fashion, retracing a little bit, and then it will continue. And we call that a flag, okay? It's called a bear flag. Sometimes it will do it while making a smaller little peak here, and we call that a pennant. And in the same way, once it's formed, it continues. And sometimes it just goes flat, and then it continues, and we call that a stair step. Well, all you have to do is look at these, and you realize they all look the same. A flag, a pennant, a stair step, they all look the same because they basically are the same, at least in function. And the function of these patterns are what we call a continuation pattern. It appears on the outside that the market's going against the trend, but what's really happening is it's setting up for the next phase of the trend in the opposite direction. Make sense? So learn to recognize these little patterns, and what you'll be able to do is you'll be able to be ahead of the next move of the market. So let's talk about the market right now and what's happening. And now I'm going to bring over the Dow Jones Industrial Average again, and I'm going to show you this little pattern that happened last week. So yeah, it's true. It's very bearish. And then we went the opposite direction. So what is that pattern? Well, that pattern is actually what appears right now to be one of those flag patterns, which means even though it appeared that we were rallying for part of the week, and we were, and even though they were super, super bearish the first part of the week, it left everybody confused. Well, the market's telling us what it's doing. What it's doing is it's getting set up, at least it appears that it's getting set up to continue that bearish trend. And then what will happen is it'll sell off a little bit, and then it will put in some sort of additional continuation pattern, and then it'll sell off, and then it will continue in that fashion because that's the way markets behave, okay? So if you can know that, here's what you can do. Number one, first thing you can do is you don't get caught up in the panic. Number two, when you see the patterns forming, and specifically when they start to break out, where I just drew this arrow here, where it starts to continue that trend, that's when you know to get out. That's when you know, get out of the trade, get out of the market, go back to cash, go to safety, let the market do its thing. Let it flush out whatever excess it needs to flush out. Let it do its thing until we start to get the opposite types of patterns, which are bottoming patterns, okay? So that's what I really wanted to highlight for you in this video. I wanted to highlight this pattern, which I believe is gonna be a flag pattern. There's a couple of other variations that it could turn into. I think it's gonna be a flag pattern. At least right now, it looks like a textbook flag pattern. And that means that, yeah, probably moving forward, we will see some more bearishness. By the way, just it so happens that we're moving into September and October, which happens to be the two most bearish months of the year. And it's an election year, so all bets are off, right? Who knows what's going to happen? It's an election year. But right now, where we are, what we see, it does appear, based on some other things as well, which actually I'll hit on in a second, but it appears that the bear market is about to ramp up. So you say, well, what other things do I see? There's other patterns that I see here that are also predictive of a bear market. So since we're there, I'll just go ahead and share it with you. We have a pattern up here. It's called a double top. And this is a terminal pattern. I'll write that word up here, terminal. And what that means, terminal. My pen does not always work the way my brain works. Terminal. What that means is it terminates the preceding trend. So as I already showed you, from November of last year all the way through current, we've been in a pretty strong bull market. Now, most of the summer, we've been in what's called a consolidation pattern as it's been moving sideways, but then it broke out, put in that double top, and now it looks like we're reversing. Okay, so if that happens, what do? Well, if the market's reversing, then you got to take action. You don't want to sit there and hold it, even though a lot of people tell you just buy it and hold it, pray it goes up. That's a terrible strategy, in my opinion. It's much better when you see the market reversing, just go back to cash. It doesn't hurt you to go to cash. You stay in a cash position until it's time to buy back in, or you take bearish trades, and we'll have to look at that in a different video. But what I want you to understand here is I want you to understand last week there was a lot of media hype. It was blown way out of proportion. They're throwing all sorts of fancy words. They're throwing around things like volatility and the VIX and all these things that make people feel fear, make you feel afraid. You don't have to. The truth is, last week the market actually went up when you look at the beginning of the week to the end of the week. The truth is, from where it opened up on Monday morning all the way through, is basically it was a pretty bullish week. But when you step back and you really do analysis on it, it is true that things are shaping up for probably a bearish season. And whether that's a 3-month bear market, which, by the way, that's the normal. In case you didn't know that, most bear markets only last about 2 to 3 months. That's your typical bear cycle. But if we get into a bigger bear cycle, like a 2008 or 2022 cycle, those can last typically 9 to 12, up to like 18 months. 2008 was a big one. That was an 18-month cycle. Okay, so we have all sorts of bear cycles. Some of them will retrace 10%. Some will retrace 20 or 30, 40%. 2008 was a big one. That was a 50% cycle. 2022 was a big one. It was about 35, 36% on the Nasdaq in 2022. A lot of people have already forgotten that. Okay, but when you learn to recognize these patterns like this, you learn to recognize the cycles, you can avoid the pain, move in when the opportunity is there, move out when the pain is coming, go back to cash, and then you keep moving your money back and forth. I'm not talking about day trading. I'm just talking about smart money management, okay? So I hope this has been helpful for you. If you like it, like and subscribe to the channel, because I do lots of these things here, give you little tips and tricks. And of course, be sure to check us out over at trademaestro.com, trademaestro.com. And until next time, happy trading to all of you. We'll talk to you soon.